Hi, this is Leslie. Hope you're well, and welcome to this update on the financial markets, and also a brief mention of Bitcoin later in this video as well. In this video, what I want to talk about is it appears from the charts that the major markets, the major stock markets, are potentially sitting right now on a knife edge or a potential cliff edge. And I want to discuss with you what this potentially means and also the significance of this chart here. So join me. All right, guys, welcome back. As I was saying before, I think this could be a critical moment here for the major stock markets after this major rally in the stock markets, really from the crash of last year. This is the crash of last year. And then we bottomed out here in March of last year. And then since then, we've just been rallying in a very strong momentum-driven rally in the major stock markets. And the question is, are we now potentially getting closer to an inflection point on the major markets? Before I continue, though, let me just first of all mention this. Imagine this situation, which I'm sure has happened to you, happened to almost every one of us, which is, let's imagine a situation where you decide to enter a market. This could be any market, whatever you like. It could be stocks, gold, Bitcoin, currencies. It doesn't really matter. But let's, for example, say that you decide to enter or buy into a market. You go long. Again, this could be based on a technical signal. It could be whatever reason you like. Let's imagine in this situation, the price breaks, for example, a previous high as an example. Again, the reason for entry is not that important right now. What matters is, let's imagine again that you go long here, okay, and you put a stop loss, you put your stop loss right here beneath the lows, and then suddenly this happens. The price initially goes slightly higher, and then boom, it crashes, and yep, it then eventually hits your stop loss, as you can see there. Again, I'm sure this has happened to you, happens to all of us. And again, trading involves taking losses. The job of a trader is to take small losses, but also to allow the winners to run. The fact is, though, that it is frustrating when something like this does happen. You know, you go long based on some chart signal, and then price quickly reverses, boom, and then hits your stop loss, and then you incur a loss. So the question I want to ask, which I find very interesting, is this. Is there a way that we can safely hedge against that risk? So again, let's imagine our risk is this much. Is there a way we can hedge against this risk so that in case the price reverses and hits our stop loss, instead of making a loss, actually we break even, or maybe even we make a small gain? How is this possible? How can this be achieved? And actually, let me ask you another question. Let's imagine that you expect the market to crash. This could be any market, but let's imagine you expect a specific market to crash very soon. How can you take advantage of that crash, but also reduce your risk as well by hedging against that risk? So that's why this week I've invited one of the world's experts on options trading and also on hedging strategies, which is Guy Cohen. In case you don't know, Guy Cohen is by far one of the world's most famous option traders. He's written some of the best-selling books on options. For example, his book, Option Made Easy, is still one of the best-selling books on options trading. I actually have one of Guy's books called Volatile Markets Made Easy, as you can see here. I find it very interesting to read. And what I want to talk about with Guy in this members webinar this week is essentially about the subject of hedging and how to hedge against risk properly, the right way. By the way, let me say this. A lot of the strategies and subjects I'll be talking about with Guy in the members webinar this Thursday are not covered in Guy's books. So in fact, we'll be talking about some fresh material in this particular webinar, in the members webinar this Thursday. So guys, join us in this educational, informative webinar this Thursday, 17th of June, 8 p.m. UK time, 3 p.m. Eastern. And you can easily do that by going on that link you see right there. All right, guys, let's get back to the chart. So as you can see here, we have a chart here of the Dow Jones Industrial Average, Dow Jones 30, the stock markets here. And I have here the chart of the Dow Jones Transportation Index over here. Now, why am I looking at these two charts? For example, why am I looking at transportation? What is the significance of this particular chart? You see, guys, according to what's called the Dow theory says that transportation plays a key role in the economy. So as I'm sure you know, there are companies that make stuff and there are companies that take stuff. So as I'm sure you know, there are companies that manufacture materials, manufacture products. They make those products, but those products have to be shipped somewhere. They have to be transported. So that's why transportation plays such a key role in the economy. And in fact, according to Dow theory, transportation is very sensitive to shifts in the economy. So when something changes in the economy, it's felt first, the impact is felt first in the transportation index, in the transportation market. So again, we're talking about shipping, but also airlines too. So for example, airplanes, these all play a key role in transportation, which is why we keep an eye on what's happening on this index, which is again the Dow Jones Transportation Index. Now again, the reason I'm looking at this particular chart is because of this. Let me show you. What's called the Dow theory sell signal. The Dow theory sell signal occurs when essentially three things occur, and every step is required for the Dow theory sell signal to occur. By the way, I should just mention the Dow theory sell signal has not yet been triggered, okay? But I think it might potentially happen if certain things come together, which I will talk to you about in this particular video. Let's go and have a look at this first. So what is the Dow theory sell signal? The first thing what we need is essentially a bullish uptrend. So first we need a bullish uptrend, which of course we have had in the Dow Jones in the stock markets. The next thing we need is this pattern you're seeing over here. So what is this pattern? Well, the first thing you need is this. You need a drop in the price by at least 3%, at least a 3% drop. Then you need the price to rally by 3%. Then the next step is very important. I'll draw a line on that low. So here's the low on the chart. This is the low that was made by the first initial drop of 3%. If then the price crashes again, drops below the first low that was made after the 3% drop, that triggers what's called a Dow theory sell signal. Okay? So in summary, let me just put it one more time. In summary, what we're talking about is a 3% drop followed by a 3% rally. By the way, when I say 3%, I mean minimum. I mean a minimum of 3%. The rally that occurs must not go above the high. Okay, that's really important. I'll do it in a different color. So whatever the rally is, this bounce must not exceed the high that was made on the stock market. Must be below it. Okay? So the rally here must then be followed by a reversal and then a crash and drop below the lows there. Okay? That's essentially what is the Dow theory sell signal. By the way, this particular signal, the Dow theory sell signal, it must occur on at least two charts. The first chart is the Dow Jones Transportation Index, or the transports. The second chart could be either the S&P or it could be the Dow Jones. So one of those two. But the first most important one is this one. Let's go back to it here. So what is necessary for this particular Dow theory sell signal is the transportation index, or the transports. Okay, now you can see the transportation index has already fulfilled. So first of all, you can see we've had this rally. We've had the bullish rally here so far. So far, so good. But have we fulfilled the 3% rule there on this particular index? I would say yes, it has. As you can see here, we've had a 3% drop. Let me just bring it closer. By the way, to make things easier for yourself, what you can do is change the chart to a line chart like this. And what you can do then is just grab a price range indicator of some sort and then just draw from the top to the lows. You can see it says right here 3.8%. So the 3% rule on the downside has been fulfilled. What about the 3% bounce? Absolutely. In fact, you can see, I'll do it like this. There it is. And as you can see, this bounce on the transports has been, according to our criteria, there it is, 3.7%. So essentially, we've had a 3.8% drop, followed by 3% rally. And guess what? The price has fulfilled the third criteria here as well, which means it has broken below the low, that low it made, what we can call here, we can call that L, the low here, okay? So it's broken below that low, as you can see here. Now, let me say this. If the Dow Transportation were to rally and get back above that high it made there, then this signal essentially would be invalid. So the signal would essentially be cleared. It would no longer apply. By the way, as I mentioned before, it is not just enough to have this happen on the transportation index. It must happen also on at least one other market, for example, the Dow Jones Industrial Average. So here's the Dow Jones, and I'll just change this chart back to candles. And by the way, in case you're wondering, have we fulfilled the 3% rule? Yes, we have. I've measured the drop here on the Dow. That covered 3% at least, and the bounce here has been 3% as well. So the only thing that's not been met, so I should just say, the Dow theory sell signal has not yet triggered. What would trigger it is if the Dow were to stay below the high that it made here, the closing highs, and let's say the Dow dropped here and took out that low, the closing low that it made there at 33,587. If the Dow were to break below this trend line and then follow through and take out that low that it made there, so essentially that low there is called L, okay? So if the Dow now were to break this trend line and then fall below that L, that low level at 33,587, yes guys, that essentially could trigger the Dow theory sell signal, which essentially could be a very bearish sign for the stock markets. It actually might mean we might be going through some kind of major correction on the Dow Jones, on the major stock markets. So it's going to be very interesting. It is sitting on a cliff edge right now. It is sitting right now as we're speaking. Notice right there, right on the cusp of that trend line, that yellow trend line you're seeing right there. Is it going to break it? We shall have to wait and see. At the moment, in fact, we can see on Friday, let's bring this closer. You can see on Friday, it closed above. The price bar did not close below the trend line. It closed above it. So far, so good. At the moment, there is no warning that this could potentially trigger the Dow theory sell signal. But again, we shall have to wait and see what happens this week and the next few weeks. If the Dow now reverses, let's say the Dow collapses below the trend line, and then goes below this level here, again, the L level that I just mentioned a few minutes ago. So if it takes out that L, that previous low back in May, and falls below it, together with the transportation index, again, going to the transportation index chart, both of them together combined could trigger what's called the Dow theory sell signal. Essentially, this particular signal I just mentioned a few minutes ago, which should be very interesting indeed. By the way, in case you're wondering, could this potentially have an impact maybe on Bitcoin as well? Well, here's the thing. In the past, Bitcoin and the stock markets have been closely correlated. There's a positive correlation. There has been a positive correlation in the past between the stock markets and Bitcoin. But here's the bottom line. If the Dow theory sell signal does get triggered, it might actually put downward pressure also on Bitcoin and crypto as well. We shall have to wait and see if this correlation continues. But there is this potential for this correlation to continue. But we shall have to wait and see. If the Dow and the stock markets do trigger the Dow theory sell signal, that might not be good news for Bitcoin either. Before I finish the video, guys, I just want to mention this one more time. This Thursday, I'm doing a special and important members webinar with Guy Cohen, one of the world's experts on options trading. And we're going to talk about hedging strategies. So here's some of the subjects I'll be covering with Guy in this members webinar. How to protect a trade, for example, with a good hedging strategy. Is there such a thing as a perfect hedge? How does it work? Guy's favorite chart pattern, and also how Guy looks at the activity of deep-pocketed leveraged players. Something very interesting I'm looking forward to speaking with Guy about. So guys, the webinar is this Thursday, 17th of June. It will be recorded for you as members. And again, to become a member with 3 months free, just go on this link you're seeing here. That is leadingtrader.com/join2021. Thanks very much, guys. I'll see you guys in the next video update. Bye for now.